Assalamualaikum, guys. As I said earlier, that in order to understand the issues surrounding Islamic trade finance, and especially that related to Sharia compliance, we need to get back into the understanding of Albay, that is trading and commercial transaction, so that when we look at Islamic trade finance under the contract of Murabaha, that is Murabaha trade finance, as well as the Islamic accepted bill, which is also based on Murabaha plus Bay'adain. So we need to look at the conception of Albay closer, so that whenever the trade financing facility uses Murabaha as the contract defining the nature of the Sharia value, it is important for us to compare the Murabaha trade finance and the Murabaha financing that is often described in the Islamic banking offering under the pretext of Murabaha financing or Murabaha asset financing, also Murabaha by purchase order. So we know that Albay or trade, it deals with capital investment. So meaning that for the entrepreneur to conduct the business, there is a need to inject capital into the business, and after which there will be the production process, the production of goods and services, which is a conversion of input into output. The input are capital as well as raw materials, labor. So these are the input that will be used to produce the goods, and these goods needs to be sold in order to generate sales and revenues. But in Albay, we know quite well that the outcome of sales and revenues are never guaranteed, because these are all determined by the market forces. Unlike riba, where the interest rate has been fixed up front, sales or Albay is a different entity, whereby the consequences of the sales are not known until there is this contract entered into by the selling party and the buying party. So that is number one. So we need to really look at Albay in a broader perspective, so that we would be able to see where trade finance will be fitting into the trading or Albay universe. Also, we know that Albay or trade can end up with losses, from, for example, economic downturn. If there is a recession, there is a low demand for goods and services, and we can see that there is no sales and no revenues. That will cause trouble to the merchant or to the entrepreneur. And at the same time, there can be cost overrun from inflation that will reduce profit. And also, trade can be impacted by fraud and negligence, especially when we look at operational risk in businesses, where weak internal control can bring about losses due to conduct risk. Those risks arising from fraud and negligence. So overall, we see that Albay or trade faces what we call business risk. That is risk arising from the business environment. It can be an environment that will be affecting all business entity, so we call it systematic risk, as well as an environment that is only affecting that particular enterprise or company, and that is, we call that unsystematic risk. But overall, the Albay or trading and commercial transaction will be confronted with what we call business risk, as any ordinary business will be facing. So Albay will be facing what we call business risk. If we look at the component of Albay in more detail from the perspective of entrepreneurship, because it is the entrepreneur who will be driving the trading and commercial transaction. So we will see that trade and Albay that is generally operated by the entrepreneur or by the business enterprise, it bears four main functions. That number one, capital investment. So meaning that the entrepreneur, the merchant, will inject capital into the business. So this capital is coming from their own pocket, or the capital can be mobilized through a partnership system. Of course, in Islamic finance, we are referring to the injection of capital via mudarabah or via musharakah. And this capital will be used to pay for inputs such as raw materials, equipment and machineries, and of course payroll. So that is a function of capital investment, where the entrepreneur must be able to garner in order to initiate the production. And then we talk about marketing strategy, and marketing strategy is about the business long-term plan for reaching potential customer and converting this potential customer into buyers and into actual customer. So marketing, apart from production, the entrepreneur needs to market their product so that this can turn into sales and revenues. At the same time, the entrepreneur who is running the trading business must be very careful with the financial management of the company. So meaning that there is a need to create budgets. So we do not want to see a situation where we have more spending than income. We must be able to see that the business is able to forecast revenue and expenses, so that we would want to prevent any form of sudden realization that there is an explosion of expenses, or there is a contraction of revenue. So all of these things need to be forecasted so that we are ready to see what can happen when the actual event occur. Managing cash flows and keeping accurate financial record for the business. So these are financial management matters that the entrepreneur must be able to control. And lastly, we talk about operational management, and that will be the daily task undertaken by the entrepreneur, and which is the process that the business perform to increase value and to generate revenues. The goal of operation is to use the resources, the raw materials efficiently, so that it can minimize costs, and effectively so that it should be able to meet the return on equity targeting, to meet customer need while maximizing profitability. So we can see that in trade or in Albay, the entity will be facing what we call business risk, and the sales or revenue generated from the business will only be identified at the end, at the end of the spectrum of production. However, when we talk about trade finance, so we assume that the sales and purchases are already secured between the buyer, who is the importer, and the seller, who is the exporter. So trade finance, as I said earlier, can be identified at the final spectrum of the production process, where the merchant has been able to lock, the sales, and therefore the next step is to see to what extent the payment and the delivery of the merchandise can be conducted. So trade finance mainly deals with payments from the sale or from the export. So if the entrepreneur is exporting the goods produced by the business, then we are dealing with how the entrepreneur as the exporter will be able to collect payment and how the goods is to be delivered to the importer or to the purchaser. So this is essentially how we want to see how does trade finance be fitted into the Albay or trade and commercial transaction, that has a greater space, so that you can understand very well that trade finance and trade are essentially closely connected, but the nature of the risk faced by trading, which is Albay, and trade finance can differ. But because Islamic trade finance is using murabaha, letter of credit, as well as Islamic accepted bill, where some form of buy and sell undertaken by the bank is evident. So that is why we need to look into trade finance from the perspective of Albay closer, inshallah. Okay guys, we can stop here. I'll see you later on in the coming videos. Assalamu alaikum warahmatullah.